Hi everybody, this is week 7 and this is lecture 1 for this week. So this is about adjusting entry for supplies. In the previous lecture, I have explained 5 types of adjusting entries. So I hope all of you have watched the lecture videos, because several minutes ago I checked the YouTube channel, my YouTube channel, and found that only 16% watched the lecture video. So that is not good. There are 22 students in this group. Only 16 students have watched the lecture video. So you have to watch the video during the lecture hour. I will take your attendance. So always watch the lecture video during lecture hour. Okay, this is the number 6 adjusting entries for supplies. Okay, I will explain about supplies. So supplies are things that a business use when the business provide services. So let's say you have a laundry shop. So laundry shop is a service business. When a laundry shop provides laundry service to a customer, the shop has to use things like detergents, softeners, etc. When the shop provides the services. So these things, the softeners, the detergents, are called supplies. In accounting, these things are called supplies. So supplies in accounting, when a business has supplies, they are assets. So if you have a laundry shop and then in your shop you have detergents, softeners, etc., and the value of these things is like, let's say $1,000. So when you have them, they are asset. In accounting, we record it as asset supplies. But when the shop uses the supplies to provide services to customer, then the supplies change to or becomes expense. Let's say you have a laundry shop. You have detergents, etc., softeners, etc. in your shop. The value of these things is $1,000. So that I accept. But one day, let's say today, your shop used 50 ringgit or $50 of supplies. That $50 have become an expense, supplies expense. Okay, let's see the example that we have here. How to do accounting adjusting entries for supplies. So let's say you have a shop, and then see the second point there. Your supplies account has a balance of 2,000 in the unadjusted trial balance. Some of these supplies have been used. On December 31st, account reveals that 750 of supplies are on hand. So the situation is like this. Let's say you have a business. At the beginning of the year, you have $2,000 supplies in your account and also in your shop. So these are asset, like I said earlier. So during the year, you have used these supplies. So at the end of the year, at 31st of December, you calculate or count the supplies when you close your account at 31st of December, you calculate or count your supplies. You found that $760 of supplies are on hand, still unused. So if this is the situation, how to do the adjusted entry for this asset supplies? So the thing that you have to do is, first you have to calculate the value of supplies used. So in this example, to calculate the value of supplies used is like this. See there, supplies, the beginning balance is $2,000, and then at the end of the year, supplies on hand or supplies unused is $760. So if the situation is like that, how much is the amount or value of supplies used during the year? So supplies used equal to $2,000 minus $760 equal to $1,240. So that is the first step. You have to calculate the supplies used. After you know the supplies used, the value of supplies used, then you have to do this adjusted entry or the general journal for this adjusted entry. So when you know that $1,240 of supplies have been used, you have to record that as an expense. Like I said earlier, supplies, if you have them in your shop, they are asset, but when you use them, they become an expense. So 1,240, you have to record them as an expense. So debit supplies expense 1,240, and then you have to credit account supplies asset. Credit account supplies 1,240. So the adjusting entry that you see here shows that at the end of the year, you have to record the supplies expense, and you have to the second thing is you have to show that the asset supplies has decreased. That's why you credit account supplies. Expense increase, you debit. Supplies asset decrease, you credit. Okay, that is the way to do accounting adjusted entry for supplies. Okay, this is a sample question or an example of how to do adjusted entry. So let's see if I can show you how to do or to answer this type of question. So let's see. XYY Enterprise prepared financial statement for the year ended 31st of December 2000. X1 Carl, the company bookkeeper, neglected to take the following information into consideration. So it shows that here there are several things that the accountant or the bookkeeper has to consider, and then for each item the bookkeeper has to do an adjusting entry. So let's see. Item 1, supplies at the beginning of the year were $4,000. Supplies purchased during the year total $2,500, and supplies was debited for this amount. Ending supplies was $1,000. Okay, how to do adjusted entry for this? So you have to look at the way how to do adjusted entry for supplies. First, the first step is you have to calculate how much is the supplies used. Okay, let's see. So how to calculate the amount or value of supplies used? So first, see here, the beginning of the year, the balance for supplies is 4,000. So 4,000, okay. And then during the year, supplies purchase is 2,500. So, and then this supplies was 1,000. So how to calculate the supplies used? 4,000 plus the 2,500. So 4,000 plus 2,500, 6,500, and then minus 1,000. So 5,500. So you know that during the year, $5,500 of supplies has been used. So how to do the adjusted entry? The adjusted entry is simple. Debit supplies expense 5,500 and then you have to credit the account supplies 5,500. Okay. Okay, let's see here the next one. D. Insurance purchased during the year was 3,500, of which $1,000 remained unexpired at year end. Prepaid insurance was debited to record the purchase of this policy. Okay, this is, I think, you have to see how to do adjusted entries for prepaid expense. Insurance is an example of a prepaid expense. When you purchase the insurance, you have to record it as a prepaid expense, because you will use the insurance only after you have purchased the insurance, not during you purchase the insurance, after you purchase the insurance. So how to do adjusted entry for this? So if you check the lecture notes for adjusted entry for prepaid expense, then you will know the process. The process is not very difficult. So first, you have to know what is the record when the business purchase the insurance. So the record when the business purchased the insurance is debit prepaid insurance 3,500, credit account cash. Okay, that is the general entry when the business purchased insurance. So now, what is the adjusted entry at the end of the year? See the information there. 1,000 remain unexpired. So if 1,000 remain unexpired, how much is the amount that has been used? How much is the amount of the prepaid insurance that has been used? Okay, the amount that has been used is 2,500. So like I said earlier, the amount used is has to be recorded as an expense. So how to do the adjusted entry? The adjusted entry is debit insurance expense 2,500, credit prepaid insurance 2,500. When you debit the insurance expense 2,500, you are recording the insurance expense for the year. And when you credit the prepaid insurance 2,500, you are recording that the asset prepaid insurance has decreased by 2,500. The asset has decreased because it has become an expense. Okay, let's see C. Rent revenue collected for the year was 15,000. Only 5,000 of this was earned in 2000X2. The company credited unearned rent to record the 15,000 rent collection. Okay, so this is adjusted entries for unearned revenue. Same like the previous situation or scenario. For this adjusted entry, you have to know what is the record when the business received the cash for the revenue. Okay, let's see here. Rent revenue collected for the year was 15,000. Only 5,000 was earned. Of this was earned in 2000X2. The company credited the unearned rent to record the 15,000 rent collection. So first you have to know what is the record when the business received the cash for the rent. So it said here, when the business received the cash for the rent, the business recorded in the account unearned rent. So the record is like this. When the business received the 15,000 rent, the record is debit cash 15,000. The business has to record debit cash 15,000 because the business received the cash. And then the business has to record credit unearned rent 15,000. why the business has to record credit unearned rent 15,000? Because when the cash is received, the person who pay the cash still does not use the building. So when the person who paid the cash still has not used the building, the company cannot record the cash as revenue. Why? Because in accounting, you record revenue only when the transaction happen. Now the rental the rental has not happened yet. The person pay the cash first, and after that use the building. So that is the record. When the business receive the cash, the record is debit cash 15,000, credit unearned rent 15,000. Unearned rent is a liability. So at the end of the year, only 5,000 of this was earned in year 2000x2. So how much is the rent revenue earned in year 2000x1? If the total is 15,000, 5,000 is revenue for year 2000x1. So sorry, 2000x2. So the revenue for 2000x1 is $10,000. So the revenue for year 2000x1 has to be recorded in year 2000x1. So how to record that? The adjusting entry is like this. You have to record the revenue. So credit rent revenue 10,000. At the same time, you have to record the decrease in the liability. So you have to record debit account unearned rent 10,000. Okay, I will say it again. For this transaction or for this scenario, the adjusting entry is debit account unearned rent 10,000, because you have to show there is a decrease in the unearned rent liability 10,000, and then you have to credit account rent revenue 10,000. That is because you have to show 10,000 of the liability has become revenue for the business. Okay, and then see scenario D. The business rents storage space from a local firm. XYY Enterprise paid the rent for September 1st, 2000x1 to August 31st, 2000x2. A total of 1,500 in advance in September. This was recorded as a prepaid expense. Okay, the business rents storage space. So this is an example of a prepaid expense. Adjusting entry for prepaid expense. So to do the adjusted entry, you have to know what is the record when the business pay the pay the cash on September 1st. So for situation is like this. When this business pay the 1,500, the business do a prepaid expense. The business pay first and use the space later, or use the storage later. So when the business pay the rent at 1st of this September 2000x1, the record has to be like this. Debit account prepaid rent, credit account cash. Debit account prepaid rent is because when the business pay 1,500, it is an asset. The business pay at September 1st, and after that the business can use the building for 1 year. So it is an asset. And then the business has to credit cash because when the business pay, there is a cash out. So asset cash decrease. That's why the business has to credit account cash 1,500. That is the record at September 1st. At the end of the year, 31st of December 2000x1, the business has to do an adjusted entry. The adjusting entry for prepaid expense is like this. You have to calculate how much from this 1,500 prepaid rent has become rent expense. So how to calculate that? So you have to calculate first how much is the rent for a month. So 1,500 divided by 12. I think the answer is $125. So you know that the rent is $125 per month. So the business has used the building from September 1st 2000X1 to 31st of December 2000X1. So how many months has passed? September, October, November, December, 4 months. So 4 months times $125 is equal to $500. So you know that during the year 2000X1, $500 from the $1,500 of prepaid rent has become an expense. So you have to record the expense for the year 2000X1. So the adjusting entry is like this. First, you have to debit rent expense. The amount is $500. You do this because you have to record the rent expense for the year 2000X1 in the year 2000X1. And the second entry is credit account prepaid rent $500. You have to do this credit entry to show that the account prepaid rent has decreased by $500. When the business pay 1,500 at 1st of September, the asset prepaid rent is 1,500. But at the end of the year, 500 has become an expense, become rent expense. So you have to show the account prepaid rent has decreased by $500. So that is the adjusted entries for this sample question. Okay, after you have done adjusted entries, the next step in the accounting cycle is to prepare an adjusted trial balance. An adjusted trial balance is a trial balance that you have to prepare after you have done the adjusting entries. In step 4, you have prepared a trial balance. Step 5, you do adjust entries. Step 6, you prepare a new trial balance. A new trial balance, which is a trial balance after you have done the adjusted entries. Okay, see here. The adjusted trial balance are useful to 1. Identify all revenues and expense accounts and prepare the income statement. 2. Compute the net income. 3. Compute the ending retained earnings balance. 4. Prepare a balance sheet using the balance sheet accounts and ending retained earnings balance computed from step 3. So I have prepared, I think, 1 or 2 videos about adjusted trial balance. You can watch the videos. After this, I will share with you the link to the videos that I have made about how to prepare the adjusted trial balance. Okay, after you have prepared the adjusted trial balance, you can do step 7. In this step, you can prepare the financial statement. So in this course, the focus is on the income statement and balance sheet only. So when you want to do the income statement, you have to remember the format for the income statement. See here the format. So the format is like this, very simple. First, you have to show the revenue for the business. So here this example is the revenue is first fees earned. Here the amount is $23,450. After you have shown the revenue, you have to list all the expenses. Here in this slide, you can see the example of expenses are salary, rent, supplies, depreciation, insurance, and miscellaneous expense. And then you calculate the total expenses. See here, the total expenses equal to $5150. After that, you can calculate the net profit or net income. In this example, net profit is $23,450 minus $5,150. So the net profit is equal to $18,300. Very simple. You have to memorize the format for this income statement. After you have prepared the income statement, you can prepare the balance sheet. So the balance sheet format is very easy. See here, in here the balance sheet is using T format balance sheet. So in the left side of the T, you have to list all the assets. You have to start with current asset first. See there in this example, current assets, the first one is cash, and then account receivable, and then supplies, and then prepaid rent, and then prepaid insurance. So you have to calculate the total current asset. After that you have to show the list of non-current asset. Here the example is office equipment. And then for every non-current asset, you have to minus the accumulated depreciation. Remember, you have seen how to do adjusting entries for depreciation in the previous lecture. So you know how to calculate the depreciation expense and how to record the adjusting entry. So here you can see how to show the amount of asset and also the accumulated depreciation for the asset in the balance sheet. See here, in this example, the office equipment is 14,500, and then you have to minus accumulated depreciation for this office equipment. Here the example is $330. Okay, that is in the left side of the balance sheet. In the right side of the balance sheet, you have to list the liabilities and owner's equity. The liabilities, you have to list the current liabilities first, and then you have to list the long-term liability. In this example, the business does not have long-term liability. The business only has current liabilities only. And then you have to show the owner's equity. Okay, for the owner's equity, you have to show the capital, and then plus profit, and then minus withdrawal, and then you will get a number. So the total liabilities plus total owner's equity, you will get a number. If you do the recording process correctly, you will see that the total in the left side of the balance sheet will equal to the total in the right side of the balance sheet. I also have prepared a video, 1 or 2 videos about how to prepare the income statement and balance sheet. I will share with you the link after this. Okay, and then this is about the notes to the account and the audit. If you have a business, like I told you earlier, if you have a business, you have to prepare a financial statement, and the financial statement contains 5 components. The thing that you are learning in this course is you learn only about how to prepare 2 components only, income statement and balance sheet. Maybe 3 components, statement of equity, that's all. But there are things like statement of cash flow and notes to the account has to be prepared when you prepare a financial statement. But in this course you do not learn that. You learn about how you are focusing. You have to focus on how to prepare income statement and balance sheet. Okay, another thing that you have to know, if you have a business, every year you have to prepare a financial statement for your business, and then after that maybe you have to hire an auditor. An auditor is a party that will check whether your financial statement are prepared correctly or not. So that is the duty or responsibility of an auditor. He or she has to check whether the financial statement prepared by a business is correct or not, is according to the accounting standard or not. That's all. Okay, step 8, you have to do closing entries. Okay, we just will show you about the closing entries. Closing entries. Okay, there are several things that you have to do. One of it is here. You have to close all revenue accounts by debiting them, close all expenses by crediting them. The difference between revenue and expenses should be credited to retained earnings. See, this is the way. And then you have to prepare a post-closing trial balance. In this trial balance, you have to list all the real accounts. Real accounts are account related to assets, liabilities, and capital, and also retained earnings. Okay. Okay, this is just to refresh your memory. So you have learned every step in the accounting cycle. Okay, just to refresh your memory, what is the accounting cycle? Has 8 steps. You have seen all the steps in this topic 3 and 4. So what is the first step in the accounting cycle? Remember, the first step is analysis. You have to do, when a transaction happen, you have to analyze the transaction. The second step is journal. So journal is something like this. After you have done the analysis, you have to record the business transaction in the journal. Journal is the first book in accounting. Step 3 in the accounting cycle is ledger. So about the ledger, it is something like this. At the end of accounting period, you have to stop the recording process and transfer all journal entries into the ledger. Ledger is another book. In the ledger, there are many accounts. So after you have transferred all the journal entries into the ledger, you have to close all the accounts in the ledger, and you have to calculate balances for all accounts in the ledger. Step number 4 is to prepare a balance sheet. You have to prepare a trial balance. A trial balance is a list of all accounts with their balances. You will get the list of all accounts with their balances from the from the ledger. Okay, step number 5 is you have to do adjusting entries. The main reason you have to do the adjusting entries is to follow matching principle. I hope you can watch the lecture video, the previous lecture video, when I explained about the reason of doing adjusting entries. After you have done the adjusting entries, you have to do step 6. You have to prepare an adjusted trial balance. An adjusted trial balance is a trial balance you have to prepare after you have done adjusting entries. And then step 7, you have to prepare the financial statement. In this course, you have to know how to prepare the income statement and balance sheet. You use the data from the adjusted trial balance to prepare the income statement and balance sheet. And then step number 8 is you have to do closing entries. Okay, you have to focus on step 1 to step 7. The main thing in this course is you have to know how to do the recording process and also how to prepare the income statement and balance sheet. Thank you very much. This is the end of lecture 3 and 4. Do not forget to write your name and metric number in the comment section. I will take it as your lecture attendance. And also, I will share a list of videos that you have to see in order for you to understand the recording process. In order for you to understand the all steps in the accounting cycle and how to do that. Thank you very much.